Hello everybody, welcome. If you have seen my previous lecture, if you have gone through my previous sum, you have seen that I have talked about the fixed capital and I have taken a sum in which there were three partners, but we had not taken a current account balance. Today we will do a sum in which we will have a fixed capital, but we will have the current account balances. Keep watching my channel. If you have not yet subscribed my channel, subscribe it, press the bell icon and don't miss any of my classes. So let us first read the question and what the question says. This is the illustration of fixed capital and we can see over here that there are three partners, Adam, Andrew and Albert, and they have a combined capital of 10 lakh in their PSR 2:2:1 on 1st of April 2019. They have a current account balance of 5,000, 4,000 and 1,000, in which one of the partners has a debit balance. Albert has also provided a loan of 2 lakh on 1st of October 2019. The partnership has withdrawn money in the following manners. Now, the partners has withdrawn money in certain manner. How the drawings has been done, let us see. Adam 4,800 per month at the beginning of every month for 10 months. Next one, Andrew 4,800 per month for 10 months at the end of every month, and Albert 20,000 at the end of every quarter for 3 quarters. Now, apart from this, we have also been given the information about the partnership deed, which has clearly stated that the interest on capital will be 5% and interest on drawing will be 10%. Commission is paid to one of the partners, Albert, 12,500, and the profit for the year is 1,80,000. Now, there is a condition given in the question to distribute the profits equally up to 60,000 and thereafter in their PSR. So what is the PSR? Please see at the top. The PSR is 2:2:1 and we are asked to prepare the required accounts. Now, when the question has asked us to prepare the required accounts and we know that we are following the fixed capital method, therefore, we'll prepare after the preparation of profit and loss appropriation account, we have to also prepare the partner's capital account and the current account. So let us start with the solution. First, we will do the calculations and then we will go through the various steps. So what are the steps? Number 1, preparation of the profit and loss appropriation account, and number 2, preparation of the capital account, and finally the preparation of the current account. After reading the question, first step is for the calculations. If you have read the question carefully, we have come to this conclusion that there is an interest on capital at the 5% and interest on drawing at 10%. Above that, there is also a loan provided by one of the partners, Albert, and you can see over here the loan is 2 lakh. Even if nothing is mentioned about the loan, interest on loan has to be provided at 6% and it is a charge against profit, and therefore it should be first subtracted from the profit whichever is given, and then we have to go ahead with the sum. So first step is calculation of interest on loan at 6%. If you calculate the interest on loan at 6% for half year, why half year? Because the loan was provided in the middle of the year. So therefore the interest on loan over here, interest on loan is 6,000. Now, the next thing is that 5% interest on capital is given for Adam, Andrew and Albert, three partners, and you can see that their capital investment was 4 lakh, 4 lakh and 2 lakh. Now, 5% calculation, 10% calculation, 20% calculations are mental calculations. You don't have to use a calculator for that. If you see very carefully, if you calculate 5% of 4 lakh, it comes to 20,000, 20,000 and 10,000. So the total interest on capital is 50,000. Repeat again, the total interest on capital is 50,000. After that, we will move on to the calculation of interest on drawings. I repeat, after that, we will move on to the calculation of interest on drawings. See how the partners have drawn. Adam has drawn 4,800 per month for 10 months. So total drawing has been made is 48,000 at the beginning of every month. Now Andrew has drawn 4,800 per month for 10 months at the end of every month, and Albert has drawn 20,000 per quarter for 3 quarters at the end of each quarter. So we'll start with the calculation for Adam. Now let us see how it is done. So Adam total drawings is 48,000. Percentage is 10%, and the time, how do you calculate? 10 months at the beginning of every month. The time left after the first drawing is 10 months, and the time left after the last drawing is 1 month. So therefore 11 divided by 2, we always have to take the average time, if you remember that. So over here 11 divided by 2 gives you 5.5 months. So over here we multiply by 5.5 by 12 because 5.5 months. So let us cancel the zeros over here, and let us cancel this and this. We are getting a 5, and over here basically we are getting a 6. Now if you cancel this and this, we end up with how much? We end up with 80. So we have over here the total amount, if you see very carefully, 10%. So 80 into 5, that gives us 400. 400 into 5.5, that would give us 2,200. Repeat again, that would give us 2,200. Therefore, the interest on drawings for Adam is 2,200. Next one we are doing for Andrew. That also is 48,000 because 10 months, 10 by 100. And now let us see the time. 10 months at the end. Time left of the first drawing is how many months? 9 months. Time left of the last drawing is how many months? 0 months. So the total average, if you calculate over here, very carefully see it, that is 9 divided by 2, that is 4.5 months. So we will have it over here 4.5 months. 4.5 divided by 12. So if you are cancelling out these zeros over here, you are cancelling this 12 and this over here, how much you get over here? You get a 40. So we have over here 400 into 4.5, which gives us 1800. Repeat again, 400 into 4.5, which gives us 1800. So this is how we calculate for Adam and for Andrew. Now we are left with Albert. Okay, we are left with Albert. So Albert has drawn 20,000 per quarter for 3 quarters. Therefore, there is total drawing is 60,000. See very carefully, total drawing is 60,000. Now the percentage is 10%, and let us see the time for 3 quarters at the end of each quarter. Now, if the drawing has been made at the end of each quarter, the time left after the first drawing is 6 months, and the time left after the last drawing is 0 months. So if you calculate the average of 6 plus 0 by 2, it is 3 months. So we'll calculate the drawings for 3 months. So 3 by 12 over here, you can see very carefully. Cancel the zeros over here, cancel the 12 and this, we are getting a 50 over here. 50 into 10 is 500 into 3 gives us 1500. So with this we have come to the conclusion of the interest on capital and the interest on drawing. Interest on capital was mental calculation, it adds up to 50,000, and the interest on drawing, if you can see, is 2,200, 1,800 and 1,500 respectively. So the total interest on drawing, if you add up over here, is 5,500. Okay, so these two figures are of very much importance and they will be shown in the profit and loss appropriation account, one in the debit side, that is interest on capital, and one in the credit side, that is interest on drawing. After the calculations, we will now move on to the preparation of the profit and loss appropriation account, and we will start the entry from the credit side by transferring the correct profit. Now, why I use the word correct profit over here is very important, because the profit given in the question is 1,80,000, and remember there is a loan provided by Albert and the loan was 2 lakh and the interest on loan was 6,000. So first we need to deduct that and we need to transfer 1,74,000 and not 1,80,000. This is a very common mistake which generally students do. Why this is done? Please understand that interest on loan is a charge against profit and not an appropriation against profit, and that is the reason why 6,000 should be first deducted and then it should be transferred. Let us start with the first entry. We'll have over here by profit and loss account bracket net profit transfer, and here it's very important to show this calculation 1,80,000 minus 6,000. So the figure which we are taking is 1,74,000. The figure which we are taking is 1,74,000. Now if you remember, the interest on capital of the three partners was 20,000, 20,000 and 10,000 respectively, which is to be posted in the debit side because interest on capital is an expense for the firm, and let us write that in the debit side. So to interest on capital account, there are three partners, Adam, Andrew and Albert. And if you remember, 20,000, 20,000 and 10,000, therefore the interest is 50,000. Apart from that, if you have read the question carefully, one of the partners, Albert, has been given a commission of 12,500. So to commission Albert, and how much? 12,500. This completes the entries in the debit side. Now we are moving on to the credit side, and remember there were three partners who had withdrawn money and there was interest on drawing of all the three partners. If you remember, it was 2,200, 1,800 and 1,500. We'll write that down over here by interest on drawings account, and we have three partners, Adam, Andrew and Albert. And if you remember, 2,200, 1,800 and 1,500. That gives a figure of 5,500. Okay, that gives us a figure of 5,500. Now, if we add the two figures, the total which we get 1,79,500. 1,79,500 is the total. 1,79,500 is the total. To share of profit, which will be transferred to the current account. Why? Because the capital is fixed. Now let us see what is the profit. So 1,79,500 minus 12,500 minus 50,000. If you see very carefully, we are getting a figure of 1,17,000. So the profit which is to be distributed is 1,70,000. Now, if you remember that all the three partners will get equal profit up to, they will get equal profit up to 60,000. That means the partners Adam, Andrew and Albert will all get 20,000, 20,000 and 20,000. Now after that, they will get the profit which will be shared in the ratio of 2:2:1. Okay, the profit will be shared in the ratio of 2:2:1 in excess of 60,000. So if you see the excess over here, the excess is 57,000. See very carefully, the excess is 57,000. Now 57,000 will be divided in the ratio of 2:2:1. That means 57,000 divided by 5. If I divide 57,000 by 5, I'll get 11,400. So 22,800 and 22,800. Therefore, finally, the profit distribution will be, see very carefully, this is Important that you show the calculations, and we take the figure over here for Adam, for Andrew, and for Albert. Okay, so what is it? That is 42,800, 42,800 and 31,400. So the inner column figure is 42,800 for partner 1 Adam, 42,800 for partner 2 Andrew, and 31,400 for partner 3 Albert. So in this question, if you remember, the profit was distributed up to 60,000 equally, and after that the profit was distributed in the ratio of 2:2:1, which has been shown over here. 57,000 has been divided in the ratio of 2:2:1. How did I get 57,000? I hope that's very clear. From 1,17,000 I subtracted 60,000, so I got 57,000. This is how it is distributed. This completes the profit and loss appropriation account. After the profit and loss appropriation account, we will now prepare the capital account, and followed by the capital account, we'll prepare the current account. Remember, in this question, the current account has a balance of all the three partners which is given to you, and we will see very shortly how we will prepare the capital account and current account. After the preparation of the profit and loss appropriation account, we will start with the preparation of the capital account and the current account. Now you can see very carefully at the top, I have started the preparation of the capital account, and then I have gone to the preparation of the current account. So in the capital account of the three partners, I have already posted the balances. If you can see, the balances are given on 1st of April 2019 by balance brought down. 4 lakh for Adam, 4 lakh for Andrew, and 2 lakh for Albert. There is no other entries which needs to be done in the capital account, and the capital account will end like this. You can actually carry forward on 31st of March 2020, and we can write over there to balance, carry down the same figures and carry forward the balance again on 1st of April 2020. So the same figures will remain in the 1st of April 2020. Therefore, I have not actually done it. The main thing is that we will concentrate on the preparation of the current account. If you remember the previous question, the current account did not have a balance because they had planned to make their capital fixed from that particular date. But here in this question, there is a balance of the current account of all the three partners. Two partners have positive balance, one partner has negative balance, and that has been written down over here. We can see over here by balance brought down for Adam and Andrew 5,000 and 1,000 respectively, which is a credit balance, and we have to balance brought down for Albert, which is a negative balance or a debit balance. After doing that, we'll now recollect whatever informations we have in the profit and loss appropriation account, and will complete the preparation of the current account. So the first entry for the date 31st of March 2020 will be by interest on capital. By interest on capital. And remember very carefully, it's 20,000 for the first partner, 20,000 for the second partner, and 10,000 for the third partner. After that, we have by commission, and there is only one partner who has received the commission, and the partner is Albert, 12,500. Okay, after that we have the share of profit which has been transferred. Therefore, by share of profit, I have to remember very carefully, the first partner's profit was 42,800. Second partner's profit was also 42,800, and the third partner's profit was 31,400. So this was how the profit was distributed, because profit was distributed equally up to 60,000, and after that the profit was distributed in the ratio of 2:2:1, which we have already shown when we have prepared the profit and loss appropriation account. This is your credit side of the current account. Now let us concentrate on the debit side of the current account, where there will be two entries. Number one is the drawings, and the number two is the interest on drawing. So we have over here two drawings. You remember very carefully, Adam 48,000 Andrew also 48,000, but Albert it is 60,000. This was the drawings which is there. Next one, we will do the entry on 31st of March 2020 to interest on drawings. If you see very carefully, 2,200, 1,800 and 1,500. So we have done all the postings. After postings, you know what we do. We do the totaling, and after totaling, what we do the comparing and we do the balancing. So these are the steps which should not be forgotten: totaling, comparing and balancing. Now let us see which side is heavier and by how much. Now you can see over here we have 42,800, we have 20,000 and 5,000. So obviously this side is heavier. So what is the total over there? We can see over here 67,800. Okay, we are getting a total of 67,800. So 67,800. Now let us see the second partner over here. The second partner over here is 66,800. 66,800. Yes, it is more than the figure given over here. So 66,800. But for the third partner, here you can see there is 60,000. Okay, and obviously it is more than the figures in the credit side. So let us do the totaling over here. We are getting a totaling of 62,500. So 62,500 will be the total for the third partner. Now is the very crucial step of balancing the figures. So first write down to balance, carried down 67,800 minus 48,000 minus 2,200. This is what we will subtract. So 67,800 minus 48,000, if you do, you actually end up getting 19,800. 19,800 minus 2,200 gives you 17,600. The balance over here is 17,600. Now let us see the balance of this. Okay, we have over here 48,000 and 1,800. That is 49,800. Okay, 49,800 minus 16,800. If you subtract very carefully how much you are getting, you are ending up with the figure of 17,000. We are ending up with the figure of 17,000. Now let us see for Albert. The total is coming to 62,500, and 62,500 minus 10,000 is giving us 52,500 minus 12,500 gives us exactly 40,000, and 40,000 minus 31,600 gives us a figure of 8,600. So this is the balance. Repeat, this is the balance of Albert, 8,600. Now we'll carry forward the balances on, as we remember, these balances are on 31st of March 2020. So therefore the carried forward balances will be on 1st April 2020 by balance brought down. Which two partners? Adam and Andrew. Figures 17,600 and 17,000 respectively, and over here on 1st of April 2020 to balance brought down to the last partner, which is over here we have Albert, 8,600. So by this we conclude the preparation of the capital account and the current account. This sum had a difference. If you remember from the first sum we did not have any balance of the current account. Here we had balances, 2 positive and 1 negative balance, and we have carried forward all the entries which were there in the profit and loss appropriation account. We have transferred it to the current account because the capitals are fixed as it was stated in the question. In my next lecture, I will take a sum in which we'll obviously continue with the preparation of the fixed capital. That means we are continuing with the capital account and the current account, but we'll come up with more types of adjustments. So keep watching my videos, don't miss any of my videos, and subscribe my channel if you have not yet subscribed.